This week in the FM, I've looked at penny stocks, of which there are plenty on the JSE at the moment. There are a lot of punters putting out little newsletters about penny stocks and how much money can be made from penny stocks when a stock goes from 2 cents to 10 cents in a short period of time. But these are often the exception rather than the rule. Penny stocks are quite interesting, but you've got to realize one thing. Companies trade on at penny stock levels for a good reason. Often the companies get into serious trouble, cash flows dry up, maybe strategy's gone wrong, and maybe there's huge amounts of debt to be cleared. So when buying penny stocks, go in with a clear mind, make sure you understand the fundamentals of the company, make sure the company is going to be able to survive. So you've got to stick to the normal rules, look at potential cash flows, look at the balance sheet. Of course, buying trouble shares is quite an exciting venture, but sometimes you can buy a share for 2 cents and it'll stay at 2 cents for a long time with nothing happening but the company barely surviving. What's quite important to look for in terms of trying to make a successful penny stock investment is look for a trigger or an intervention. Now, this can either be through a new shareholder coming in, often very quietly, so you have to watch shareholder registers and watch SENS announcements. New assets can be injected in. Often these are also well disguised. You can't really see a change happening, but it might just signal that a big change is happening. And also look for new management. Sometimes new management can do inspiring things in companies. I've mentioned a couple of examples in my copy. But foremost, always do the basics. Go back to the, as I said, potential cash flows. Look at the balance sheet and don't just buy shares because they've reached 1 or 2 cents hoping for a rebound. It can be a very costly exercise in the end.